Hello viewers, welcome to Centricity Speaks. I am Manu Avasthi, founder and CEO, Centricity Wealth Tech. In this episode of Fireside with Expert, we have an industry veteran who comes with 3 decades of experience. Mr. B. Gop Kumar is the CEO of Access Asset Management Company. In this episode, we are going to take up the questions which you have shared with us for expert opinion. So, without wasting any time, I will take it directly to Gop. Hello Gop, how are you doing?
Hey, thanks, Manu. I think you've got a great office. Thanks for hosting me. And I think you are now 2.5 years old in this business.
No, we are honestly 15 months old.
15
right
months,
now.
yeah. Let me stand corrected here now. I think you guys have done a great job. I think.
Thank you so much.
I'm pretty happy that we are having a conversation today.
Yeah, thank you so much. So, I mean, there was a lot of demand from our viewers in terms of really asking very basic questions, which are basic in nature but are extremely important for investors. And these questions are across the universe, both on the debt as well as on the equity side. So, we'll keep this conversation more towards the investor queries. But one of the questions which really comes to the mind, top of the mind at this point in time, is with the interest rates globally going up, what do you expect the RBI's stand to be in the next monetary policy? How do you foresee, or what is your house view?
Largely from our house view, the way we look at it is that we need to look at 2 parts. One is the domestic, what's happening on the domestic side, and what's happening on the global side. I think when you really look from a domestic perspective, our belief is that we are actually flattened in terms of interest rates. I think you may have another 0.25 basis point at the max. It's coming very, very clearly from the way the central bank is managing the whole interest rate scenario today. India actually took up maybe 10 years, 12 years back, actually India looked at and said that we will do inflation-based monetary policy. The way we look at it is already at 4%. And we don't believe that the interest rates can go up now. If you look at GSEC, it's already peaked at 7.2%. Our belief is it can be flat, and we don't see much more very aggressive plans for central bank like RBI to increase rates. Globally also there are 2 pictures actually. If you look at from a Fed and ECB's perspective, they've been on and off, and they have not been very aggressive stance quite often. But having said that, you've seen their interest rates going up.
Yeah.
We have to wait and watch how that shapes up. But from an India perspective, I think we are much more comfortable from here.
Okay.
So I think that's our house view, the way we look at interest.
So it will be good to interpret it as it's more looking stable at this point in time. The Indian Central Bank to keep a pause at it, while whatever might be the stand of the European or the US Central Bank, that will not really affect the policy over here.
Yeah, I think Indian macros are looking very, very interesting. If you would have asked me this 4 months back or 4 quarters back, my answer would have been quite different. If you look at our inflation, the way our GDP looks like, it's a very interesting time that India is leading now. I think from an emerging market perspective also, it looks much more positive now. And you would have seen, not only from debt side, from equity side also, you'd see that large flows coming to India.
Sure.
I think that's interesting time. And I think, as I said earlier, I think the monetary policy which is focused on inflation, we are at 4%. There is no headroom technically for the central bank to increase rates. Maybe 0.25 can possible, but I think it's much more less aggressive than what it was 4-5 quarters back.
Okay. Very interesting point which you shared about India macros. Now, the way we have seen the Indian markets have been extremely resilient. The equity side over last 12-18 months when the interest rates were going up. Historically, if we go back to our 20 years experience in the markets, usually the equity markets tend to be a little bit more wobbly in nature when the interest rates go up. But the way the Indian markets have behaved, it has been just sideways, but there has been no serious correction or no serious concern in the market. With now market at the toppish levels, which they are currently, what is your medium-term outlook over next 3 to 4 quarters on the markets?
See, markets are looking very, very interesting. I think the way I look at it in the sense that the way we came out of the COVID time, I think the more and more theory says that India actually stands out the way we manage the COVID whole issue. In that sense, we didn't have a much pressure on the economy. Having said that, yes, there are some quarters there was pressures, especially on the rural side. But if you look at purely from unemployment perspective, comparable to some other economies, we have done much, much better.
No.
If you really look at from a macro perspective, India has done extremely well. The way the inflation is panning out, India had a large headwinds today because crude at $75 is a very interesting time. If you look at our fiscal looking much better, our reserves are looking much, much better. The growth is looking much better. And if you look at and speak to large corporates, we do see the capex coming up very, very fast in this country. So I think
and the GST numbers are also
GST
going.
number, if you look at 1,61,000 crores, it was a pretty large, and I still track it was below 1 lakh crore, and we are at 1,61,000. I think more and more tax compliance is also getting much better in India. In that sense, there's a lot of visibility. If you look at the recent advanced tax numbers, it looks very, very positive now. My belief is that next 3-4 quarters, I think equity should do extremely well. We also strongly believe that the companies which is closer to the economy should do extremely positive in that sense for us. So if you look at the way we have adjusted our portfolios, as basically to look at and say that which are the growth companies, how does the growth companies look like, and we have seen the margin expansion also. In that sense, there is a very vibrant economy, and the markets actually will reflect the vibrant economy. And my belief is the next 4-5 quarters, you will see the market should do extremely well. And the proof of the pudding is like, we look at last quarter, the FI flows are been much more positive. And among the emerging markets, we got much more larger share. I think markets are looking much, much better. So if you have to put a gun on my head and say, what should be the equity return? I think we can, from a calendar year perspective, you can look at a double digit in terms of the returns and the purely from index perspective.
What is your view on China plus one story which has been going around? So I'll club two questions together. One is China plus one, because that's something which everybody has been talking about. And the second question is that while things are looking positive, what could be the possible headwinds the India market can foresee?
One is that India can't be completely away from the global economy. India is much more globalized if you look at from a last 20 year perspective. So that's the reason I said that when we spoke about interest rate, I made a comment on Fed and especially on the ECB side. I think what's happening there, it has an impact. The interesting is that India is now trying to de-risk. If you look at our economy and if you look at the GDP numbers, we were largely service economy. I think we went on for how many years of service economy, where we look at our software exports, look at all the services, India was playing a larger role. I think the focus has really changed and said that make in India, getting manufacturing here, making the manufacturing hub for semiconductors. I think a lot of smaller initiatives which will make India much more stronger. I think
it will strengthen the roots.
Strengthen the roots. I think my personal belief also is that manufacturing is what changes the economy.
Yes, absolutely.
And if you really look at large companies across the globe and look at the market caps, you have an argument that you're also a fintech company. A well-tech company, the well-tech company also creates a large market cap. But I think if you look at large organizations, they still have, based on manufacturing, I think some point of time, I think economies will strengthen the manufacturing because it gives employment. The employment leads to the economic growth. The economic growth will reflect in terms of how the economy will go further. I think there is a large effect on economy when people get much more money in hands. Much more important from India perspective is that the way India is spending on infrastructure. I think any economy in the world which spends on infrastructure, actually have seen that 3 times effect on terms of economy.
Spiraling impact is always there.
More important because the money comes to common man. And the common man has an ability to spend. I always call as when the money comes to a common man, the buoyancy of the money is much, much larger.
That's strong. Absolutely.
So I think that's where I do believe that India is being positioned much more better last 10 years now. And India is becoming a major hub in terms of manufacturing.
Great. Now that you have very recently taken over the charge of Axis as an AMC, and it has been a very strong, stable name in the Indian market, can you share with our viewers, what is the current product portfolio suite, and what is it which as an AMC you would be looking at focusing, and what is it that new that you would be looking at adding into your product portfolio in times to come?
Couple of things. I think we being a large player in the equity side and the debt side, we do manage almost to like 50,000 crores of assets, and it's a pretty large AMC in that sense. We do cater all products for the customers, and for example, we have products from equity to debt, and including the hybrids. We do have alternate investments, typically like a PMS product, and specialized product what we can build for customers. So having said that, there are themes which we look at in the market. We also look at product suitability in terms of what product the customer is requiring. One of the reasons I do engage with you is to understand what your customer requires.
Yeah, sure.
I think there's an opportunity for us to build products for our customers. I think whatever we do, I think we want to ensure that we do look at from a customer perspective. One point of mine is that we as a manufacturers will build products. I think it's an opportunity for you all to ensure that customer have a proper risk appetite and risk allocation. I think if you have to talk to retail customers, my view always is that I have 69 products in my bouquet what I offer to customer as of now. For example, customer is the first time investor, what mutual fund to buy? I think this is the biggest question mark people talk about.
Yes.
And he wants to put money in equities because he's seeing his neighbor making money.
Yeah.
And the first thing is that they'll come to you and ask you what should I put money. I think my always said that you always should look at a balanced
Approach.
the balanced fund, the BAF we should look like, because that's what we manage. Because we will look at the markets and ensure
It's
that
a specialist who's managing
and
far more well informed.
that we are saying that I will ensure that balanced average fund actually tries to build, saying that my fund manager will take a call when I have to be in debt, when I should be in the equity side. So the call of confusion of customer is that should I put money on my debt side or should I put the money in equity? I think that gets solved. Having said that, once your customer becomes much more
Informed.
I think what I always believe is that customers should do their risk profilers, and then the risk profiler should come to an asset allocation. I think most of the places, I think people first do asset allocation and then try to do risk profilers.
Well, absolutely, because this is a question which comes to us very often when we meet our advisor. We are a B2B platform, and there is a very strong debate which goes for equity as an asset, because it's definitely the best performing asset.
Yeah.
It has been time proven. And they always ask, why not only equity and why to do asset allocation? And we also say the same thing, that I mean, every investment has its own time horizon. Yes, if you have a 10-year outlook, very straightforward, go equity, you will never go wrong on that. But if you have definite goals in between, intermittent goals in between, asset. So completely agree. And yes, BAF for many years have been a proven strategy for
because one of the idea here is that it's a fund manager takes a call and the times the market where he wants to do. Second is from our AMC perspective, we are very clear that we are very, very quality cautious focused companies and what we invest. For example, if you look at almost all our funds and we look at our portfolios, you will never have a doubt in terms of our quality, what we produce. I think very important for investors to look at that the quality pays on the longer term in terms of returns. I think that's what happens, because most of the investors don't look at what portfolio we do. I think that's the responsibility of as advisors like you to curate and say that which asset manager is better, and from there you decide that which scheme we should suggest to customers.
Absolutely.
I think my belief is that when you guys play a very large role in terms of advising a right products to customer, our job is to make sure that we drive good quality products, and I think that's how between an asset manager and a financial planner works pretty well. There is always a debate in life that whether I can go directly to the AMC and buy. You can always buy that, but I think what is important is that if you are a first-time investor and if you require help of advisors like you, I think the platform is very interesting platform. I think you need to help these investors. And firms like you, actually, well-tech firms like you, actually goes deeper and creates financialization to the country. I think we are hardly at 8-9% in terms of our
Yeah, that's the whole idea, to go to the hinterlands, penetrate down in tier 2, tier 3, tier 4 cities, and take the advantage of the digitization which is happening. Anything which the asset management company is specifically looking at or trying to focus upon in times to come on the alternate side, whether it's the private market on the equity or debt?
I think the most asset managers now are focused on to create a credit structure fund. I think a lot of large HNIs and family offices are looking at credit structure. I think that's an opportunity which we try to ensure that you will get on higher returns, which is FD plus 5%.
Yeah.
What the ballpark number we are trying to
Debt
do.
plus kind of a...
Debt plus, and I said FD because it's the most relatable. Because I always believe that when we do a conversation between us, and if our investors should look at, we have to dejargonize what
Absolutely.
we speak. I think
make it simple.
Make it as simple as possible. So I'm attempting not to use jargon. That's why I use the word term FD. I think that is one piece which the HNIS looks like now, that alternate side. We are also looking at and saying that there's an opportunity for us to look at debt PMS, because debt PMS is one thing which...
That's interesting. Debt on PMS platform.
Yeah, PMS platform. That's what we are looking at the moment of time. Idea here is that we come with a very strong debt background also, because we manage almost 90,000 crore of assets. If you look at our track record of 13 years of track record, you don't find any problems in our debt portfolio, because debt portfolio actually we focus more on quality, less on getting more returns, but it is a very, very stable.
More stable.
More stable, because idea is to ensure that capital preservation. Having said capital preservation, I think there is a target in return what we look at. So coming from that house background is very important for us to look at and say that if an HNI is there, can we look at building a debt portfolio for them, because we have access to all the papers in the market. So I think that's a huge opportunity which I look like. I think the industry also will replicate. I think we want to be a first mover.
I mean, I'm just for the benefit of our viewers, when you say debt PMS, so technically it means that the security will be held in the demat of the investor. Every debt security.
That's right. Yes.
So presumably it will bring in a lot more transparency and
much more transparency. For example, I spoke about the most investors don't look at the fact sheets, or they don't look at the portfolio.
Exactly. That's where, because I can relate to the merit of holding debt into a PMS.
And sometimes in what happens in the debt mutual funds, I get restricted in terms of what I can buy. For example, I can always say that I can buy only AAA papers or AA papers. Here I can look at the customer's risk appetite and try to build a portfolio. And this is only focusing on the large customers. From a retail customer perspective, you really want to look at and do a asset allocation. I think we have a plain vanilla debt schemes which are AAA rated, and we can always look at based on his cash flows. We can really build a portfolio on the debt side. I think my belief is that Indian retail investors are not largely exposed to the debt side. I think debt components is largely related to FD. And one more point which I want to talk about is that when you look at asset allocation, what people miss, especially salary classes, that you have mandatory contribution to the your PF. The PF is also part of your debt portfolio. I think when do I have a conversation with the customers, especially retail customers, and we talk about asset allocation, I think most of the time they don't even consider this as a
debt.
I think it's a real debt in that.
It's a real debt. Yeah.
And another product called NPS. NPS is another product.
NPS debt, and these are very good passive long-term investment. Great power of compounding gets exhibited into this.
But India is going through a large financialization. I think platforms like you can able to attract customers across Bharat. I've always said that what happened in digital for last 7-8 years in the country, especially client onboarding, ability to give advisory on the platform, I think it's Bharat today. And when I started my career 28 years, we used to put branches in smaller cities, and people have to walk up 5 floors to identify which office this is to get the financial advice. I think India has a huge opportunity in terms of financialization. I think you guys play a large role in terms of getting customers. And it's all about, just not about wealth creation. My belief is that wealth has to be created. I think wealth has to be passed on to generations.
Yes.
I think that's the role we all play as asset managers and as financial planners. I think we have a large role to play in this economy.
So in fact, this term which you have used, Bharat, so many a time international investors do also come to us and they ask us, okay, what is it that you are exactly doing? So we also tell them that we have a B2B platform, One Digital, which is for Bharat, which is tier 2, tier 3, tier 4. And then we have a platform for India, which is Invictus, which is for pure ultra HNI, which is 100 crores plus of financial portfolio. Very true. Thank you so much, Gop. It was an amazing conversation, brief but very, very insightful. I'm sure our viewers would have liked it. Please do send in your queries and comments to us and anyone else you would like to hear. We will have Gop again with us with new fresh set of questions. And as always, please do subscribe to our channel and look forward for more interactions like this. Thank you so much, Gop.
Thank you for hosting me, and look forward for one more conversation.
Absolutely.
Thank you so much.
Thank you.
Thank you.